All right,
All right, 2 minutes and counting.
One minute and counting. Good morning, Checkmate crew. It's the opening bell of the New York Stock Exchange at 9:30 a.m. Today is Thursday, October 20th, 2022. Yours truly, Mickey Blindside here with your market memo. Okay, so first thing, let's talk about earnings. Tesla just had earnings yesterday. That was the big news of yesterday's close. Tesla is opening lower by about 7%. So all those people who chased Tesla thinking that it was going to go up, well, those calls just got decimated, okay? And as you can see here, puts, okay, so yeah, those who had puts, congratulations. You guys, it dropped further than what the market was expecting. Again, if you were in calls, you just got decimated. But that's the news of the day. Tesla, they had lower than expected earnings. Elon, of course, comes out and says that, we're gonna have a blowout in the end of the year, though. We'll see. He likes to talk it up a bit, but. I mean, which is understandable. He's the biggest shareholder as well as the CEO. Of course, he's going to talk up the company, but everybody else, all the other CEOs, they're lowering their future guidances. Of course, we've talked about this phenomena before where CEOs talk down their earnings expectations to really put in low hurdles. So when they beat those hurdles, their options bonuses get paid out more. If they're able to get options awards at lower prices and lower strikes, and then they beat their ER, well, guess what? They just get a bigger payout. This has been going on for many decades. I mean, since they even wrote about this in the 1920s. So this is not anything old. This is not something that I observed, or I'm the only one that knows about this. No, that's not the case. This is a very well-known trick in management. So we'll see what happens. Okay, most of the earnings comes out next week. We got a lot of tech earnings coming out, so we'll see what happens next week. I think we're going to see a lot of chop. We may see, if you look at the data, it usually is about a week or so before. Tech stocks tend to have this run up right before ER, and then we see a period of chop, and then the market will resume its trend one way or another. That's usually how ER seasons work. I'm not going to bet on any ERs this time around, just because of all the chop and where we are in the market. I just don't think it makes any sense, and especially with the IV being so inflated in some of these stocks. Really, the edge is against you when you start buying some of these highly inflated IV options. So I'm staying out of that, but you guys are welcome to do whatever you wish. So that's the news in Tesla. Now let's talk about across the pond in Great Britain. We had Liz Truss, the Prime Minister, 44 days into her term, she resigned. So there you go. Believe it or not, there's a lot of people who expected her to leave, and a lot of them were basing that off of the bond market in Great Britain. And so the bond market really did not like the plans that Liz Truss had outlined for the country. And so in the end, the bond market is boss. There's a big political strategist. I believe it was Bill Clinton's strategist who said that if he could live another life and be reborn, he would come back as the bond market, because everybody has to listen to the bond market. And there is some truth to that, okay? And so the bond market did have its kind of moment in the UK. And so, of course, it becomes such that, that she was pretty much forced to resign in order to stabilize the markets, all right? I'm sure a lot of people around her pressured her, especially a lot of people, a lot of institutions that hold British bonds probably pressured her to resign, okay? So usually that's what these things happen. Whenever you see huge movements and huge collapses in the bond market, the odds of the other side winning, or whoever the incumbent is losing, just the chances of that just increase drastically. And we saw that actually here in our own domestic politics here in 2008 for the Obama-McCain election. We saw the same thing. We saw Lehman fall, and then all of a sudden, that's when the odds changed against the incumbent party, which was Republican at the time, and that's where Obama started getting a lot of support. It's right after Lehman fell, the bond market was in turmoil, and then that's when the odds crossed for a Obama victory over McCain. So this phenomena happens over and over and over in world politics, not just in the United States or in the UK, but pretty much everywhere. Bond market is king in the end. We elect presidents, but in the end, the bond market is king. So that's the response to the British pound is advancing against the dollar. Speaking of the dollar, let's take a look and update our dollar chart. I didn't have time today to update my dollar chart. I always like to place these lines wherever the moving averages are, and also like to put my red line is usually where the weekly 2 standard deviation Bollinger Band is. So it doesn't look like that has moved much. Okay, so this is our level. This is the 18-day moving average. Remember the rule of 3? Well, guess what? We did not get it yesterday, okay? It broke down below the pivot. And again, we're using the 18-day moving average as a pivot just because in 2022, it has been a good pivot to use in currencies. I don't know why. I just keep using something until it stops working. So dollar, Euro, Australian dollar, all these currencies are using the 18-day moving average as pivots. So we lost that pivot back on the 17th. And then the 3-day rule, we needed the 19th to end below as well too, but we never got it. Okay, it ended up above, and now we're still above that 18-day moving average. All right, the dollar, if it comes down, I'm willing to take a long trade around here, 103, 104 zone. I don't know if it's going to get there or not. I have no idea. This could be the seasonal top. I mean, I said that back in August. I thought this was the seasonal top. I was dead wrong about that. All right, it ended up going a lot higher, or maybe it was around here. Yeah, I think it was around July. I called this the top. That's what I was. I called this the top back then. I was wrong about that. I do think the dollar is going to end up higher, but I just didn't think it was going to go up in a straight line like this. But if it does fall around the 103, 104 zone, I am willing to take a dollar long position on that point. Now, how do I play a dollar long? We can use, for those of you who don't have futures, you can use UUP, which is the dollar index ETF. So around that level where the dollar is, at that level is right here, right? Around right here, 103. So on UUP, of course, this is not an exact calculation. I'll try to get you an exact calculation later on. But that would be around around this zone right here, 28, around 28.25, 28.50 zone, 28.25, 28.50 zone on UUP. I'm willing to go long right there, okay? How will I get long? Well, we can use options, okay? The 820-day is out, so I might buy leaps at that zone, all right? I might buy some leaps at that zone. Leaps are, it's not too expensive. Implied volatility is not that high on these currency ETFs. We'll see. The spreads are kind of wide though, so maybe not the 820-day. I mean, it just depends on when it gets to that dollar index 104, 103, 104 zone. But whenever it does, that's a little bit more reasonable. I might go with the 456-day one then. Okay, it just depends on what happens there, and it also happens on the IV time skew. You know, where is the IV located? If the IVs are too high in the longer dated ones, then I might go a little bit shorter dated and maybe even do some spreads. All right, but I am planning on getting long the dollar if that dollar index does go to that 104 zone right here. Okay, so I'm adding that to our trade plan right here. I'm going to use UUP, I think. I really want to keep it defined risks. I really don't want to play futures, just in case if it falls through all the way down. Very, very unlikely in this macro environment, but who knows, right? Who knows? So I want to make sure my losses are as small as possible. So I'm going to be going for lower gamma, calls that are a little bit further dated out, just so that if I'm wrong, I can just exit at a very low loss. And I'm going to be very patient about it. And really pick my shot at the right moment. And I think that right moment is going to be if we see a fall, like let's say, I don't know, let's say we get yield curve control or something like that, it may go down to here. If the Fed decides to do yield curve control, of course, I don't know if they are or not, but if they do, that would be a great spot to enter long on the dollar, because I do still think that every time the dollar comes down, emerging markets are going to need to raise cash in order to pay for the bond debts that come through at the mid and end of 2023. Okay, so there's still going to be, I think, dollar demand as that phenomena, as we get closer and closer to that date. All right. And that's usually how emerging market crises start. Usually it's because of low liquidity, because everybody's chasing the dollar. And again, that's my expectation. I think mid to end 2023, we're going to have an emerging market crisis, kind of like 97, 98, they call that the IMF crisis. I think it's going to be very similar to that. We're already seeing the Japanese yen going back to those exact levels, which is kind of a funny coincidence, or is it, The Japanese yen is still on its rampage. I mean, and again, I posted this on Twitter. Maybe the Japanese, maybe this is what they want, because the Nikkei has been surprisingly strong compared to other world stock indices. So we'll see. All right. Speaking of currencies, let's take also a look at euro. The euro, let's update the euro chart. I haven't updated this chart in a while. So there we go. We're at the 18-day moving average. Again, we're at the pivot. Did we close 3 days in a row above? We did. 9769, and what was the close here? The close was 9771. Okay, so we popped over the 18-day moving average, and we stayed above it. It actually retested. So on a Euro USD, we're actually above the 18-day moving average. We successfully did a 3-day, successfully 3 days of closes over it, okay? So this has, the Euro at least, has fulfilled the 3-day rule. There's still a chance they could go below it, all right? But I think we see a meaningful rally and a risk-on sentiment if this can turn and make this a higher low. If this becomes the higher low and it just keeps going up. If this really starts going up and makes a higher high, I think huge risk-on sentiment will enter into the markets. All right, that's the Euro chart. Okay. And we've been using the Euro as a sentiment indicator. I mean, ever since June or so, ever since it started testing that parity, I said, hey, most likely we're not going to see a meaningful rally unless this starts turning up. So we've got now a higher low. Can we see a higher high? That, I think, would change at least the short-term sentiment of risk assets, okay? So a chart to keep in mind, okay? Keep the Euro USD in mind. Let's actually take a look at some of our bond data. I think there's some interesting developments actually happening in bonds. TIP TLT keeps staying elevated and is actually gapping up, okay? This is not a good sign for growth stocks, okay? And we're actually seeing that in our growth to value ratio. That's the IVW, which is the growth ETF divided by the value ETF, all right? Growth versus value is still trending down, okay? So which means that value is going to outperform growth, all right? And I think a lot of that has to do with TIP TLT. TIP TLT, which is our forward-looking inflation indicator. It's inflation-protected treasuries divided by long-term long maturity ETF treasuries, long maturity treasury ETF, it's still going up. So what does that mean? That means the market, the bond market, is expecting some more inflation down the road. Without this coming down, I don't think we're going to see a meaningful drop in the 10-year Treasury yield, okay? The 10-year Treasury yield is going to keep going up as long as I think TIP TLT keeps going up, all right? As inflation expectations keep going up, all right, the yield is going to keep going up over the 10-year, okay? And we're seeing actually short-term yields also going up, breaking above its highs. Also, 5-year, remember ZF are, this, if it keeps going down, I said dash for cash, right? And so that's actually what we're seeing right now, is that we are back to those dash for cash levels. I mean, if you can now go and fund managers can now get a 2-year Treasury bond, get 4.5%, make half their quota that they need to, and not get fired. Okay, basically this supports risk off. Why put risk in the portfolio if you can get 4.5% and wait it out, right? And the number one objective of a fund manager in Wall Street is to not get fired. So this becomes a lot more attractive in this environment, all right? So any rally, I think, is going to get sold off until these yields come down. TNX still is the chart of the day. I mean, I think if TNX just keeps going up and up and up, growth stocks, especially like software, semiconductors, all of that is going to get hit pretty hard, all right? What's actually the market doing? The market's up today. I think a lot of that has to do with options positioning. There's just so many in-the-money puts right now. I think even though there's rate pressures, this market could still march higher with just the amount of in-the-money puts there are. But we'll see, okay? We shall see. We'll see if the TIP TLT could break down sometime today and tomorrow and create a false breakout. that would change the story. But the window for that is quickly diminishing, unless on the weekly chart. Yeah, I mean, if it closes here in the weekly chart, I mean, that's a huge move. All right. It would have to be this week, latest next week on the weekly chart. I mean, if it closes up here and then next week we have this huge outside week down candle, that would be a false breakout. All right. I'll believe it when I see it, though. If that happens, then we could see TNX really come down. But until that happens, no go. No go. Again, this is what's stopping me from doing anything tech related. Going long on anything tech is this. All right. Speaking of which, let's take a look at some of the indices. All right. Tech index, NASDAQ. NASDAQ is up today. It's trying to attempt to make a higher low. Will it go up? I mean, again, I think the NASDAQ is going to be the weakest index from our growth to value chart. I think this is going to be the weakest index. If you guys are trying to play a bounce, if you are inclined to do so, I'm not. But if you guys are, I think where you're going to find the most luck is probably with the Dow Jones. All right, the Dow Jones is way stronger than the NASDAQ right now. Speaking of strength, I also said RTY is pretty strong too. But RTY is also very linked to corporate credit. And corporate credit kind of is just like flat right now. You can see our junk bonds ADL. Our junk bonds ADL went down yesterday. However, it's just kind of flat for the last few sessions. Okay, so even the advances 2 days before, I mean, they were all right, and then yesterday's decline, it gave back some of it. So it's almost like it's flat for the last few sessions. Okay, so it's flattening out. It's neither good nor bad. I mean, it's still at a low point. It's still trending down, but it's flattening out. Will it curve up? If it curves up, then we could see more relative strength come back into the small caps. But small caps is very junk bonds sensitive. It's very sensitive to junk bonds. All right. So again, I think your best bet, if you're going to play long, and again, I don't know why anybody would want to do that, but if you are going to go long on an index directly, I think that the Dow is probably going to be your best bet out of all the indices. Okay. Speaking of the Dow, Boeing, remember those Boeing call spreads I had, and then I got out of them because I got punked out. I only lost like 5-6% on that spread, but I wish I had held. Those were the 130, 150 spreads. I would have tripled my money on this move. Boeing is surprisingly strong. Remember I said that there was a lot of institution accumulation going on, but then this happened and I got scared and I just got out for a small loss. About 30, I look back on my trade log, and about 30% of the times when I get stopped out of a trade, it usually goes, it would have been better if I had just kept it 30% of the time. But it's that 70% of the time that forces me to follow my rules. Because 70% of the time, when you're wrong, you stay wrong, and that's just usually how it is. That's life. That's just part of trading. Okay, that's life. Okay, so there's that. Now we are also, in the thick of earnings season, but also besides the earnings season, right after peak earnings season passes, then we get to Fed season. All right, so Fed season right now. Let's take a look at some of these odds. The odds have been actually shifting right now. If you look at right now, there is a 75 basis point rate hike pretty much baked into the market. Okay, it's 75 basis points in November. Most likely in December, we're also going to see another 75 basis point rate hike. And then on February, it looks like we're going to do another 25 basis points or so, peaking out at around 5.25 in March. Okay. Remember in June, remember how I said William Dudley, ex-Fed governor, is saying that we need 5% Fed funds rate? And I said if Bill Dudley is thinking 5%, if Bill Dudley is saying 5% publicly, that means Jerome Powell is thinking 5%. So already in June, we were anticipating a 5% Fed funds rate. And lo and behold, look at this. Now the market's pricing it in. Okay. So now the market's pricing in 5.25. Let's actually take a look at and see how far this goes. 5.25, 5.25, and then a rate cut in September to 4.75.5, 4.75.5, 4.75.5. So, okay, so it looks like we're going to go to 5.25, and then get a rate cut sometime in the summertime till 4.75, 500, okay? Or at least that's, or by September, I should say. So that's at least what the market is showing in the Fed funds futures, okay? So a little bit shift, a little bit, they're more shifting towards a higher interest rate, not by much. I think the peak from a couple of weeks ago was like 4.75. So now it's at 5.25, so about 50 basis points extra. All right, I think it's based on the CPI numbers and some of the other data that we've been getting in the last couple of weeks. So there's that, okay? Liquidity data wise, we already went over junk bonds, ADL. Again, it's flattening out. Our New York high-low line is flattening a bit. Today, though, it is back down to negative 88, though, right now. So it's still going down. We're not getting anywhere near a MOAB signal. Again, MOAB signal means this all curves up above the moving averages and starts going higher. And we have not seen that all year. It's flattened out at a few places this year. But since November, December 2021, it has been going down. It has not curved up. It has not gone over all moving averages. It went over like the first one or the first two, but it hasn't really gone over all three moving averages all year. So until that happens, usually we don't see a meaningful rally, all right? New York AD line, it's trying to attempt to go higher. We'll see. I think it takes a few more days to show us any clarity. Equal weighted is also moving up as well too. It made a higher low, and then now it backed off from making a higher high. So right now it's kind of coiling and is just kind of stuck there. We'll see what happens. I think earnings will have a big impact on this. And then after earnings, after 2 weeks of that, I think the Fed will also have a huge impact on this. So we've got some big events coming up in the next 4 weeks. So again, this is why patience pays. We wait for the edge of price structure so that we can manage risk, because right now the cost of being wrong is pretty high, all right? We could see big movements either way. So if you're on the wrong side of the trade, it's going to be a very expensive mistake. So I do not want to be giving up capital during these times, because when the MOAB happens, when the mother of all the buy the dips signal happens, that is where we will make a boatload of money, okay? So there is no reason to get hasty about things and start losing capital before then. I want to preserve as much capital as possible so that when that MOAB happens, we can go in and we can lean into that trade and really make a killing, okay? So we will see what happens. We'll see when that MOAB happens. Again, no signals yet. We don't act without a signal, okay? We have to get that data confirmation first. All right? Cryptos, still open interest, very much down. I've been looking at CoinGlass, so thank you for the suggestion, MSE. One of our members, scours through all these data sites for crypto. CoinGlass is pretty useful, actually. It tells us futures positioning. But right now, as you can see, when it comes to the long-short ratio, we're actually starting to see increased shorts. We're starting to see increased short bets in Bitcoin and in Ethereum. All right, not so much for Ethereum, but more so for Bitcoin. Okay, we're seeing more and more short positioning. I don't know what to make of that. Okay, I don't know why there's this kind of discrepancy between long shorts on ETH and long shorts on Bitcoin. Not really sure where that's coming from. I'll have to do a little bit more research and see why. Maybe it's just because of retail. Maybe ETH has a little bit more retail participation, or it could be hedging. Maybe it's not retail. Maybe institutions are accumulating ETH and they're hedging with ETH futures, going short ETH futures to hedge their long ETH physical portfolio. It could be that. It could be that. Or I should say Bitcoin. I'm sorry, Bitcoin. Maybe Bitcoin. Maybe because institutions are long Bitcoin and they want to protect their Bitcoin holdings by going short Bitcoin futures. ETH a little bit more equal, so maybe a little bit less institutional participation in ETH. Not sure. I have to do a little bit more research and see. All right, but we are seeing positioning starting to shift, going a little bit more bearish now on cryptos. Okay. At least on the futures, all right? Let's take a look. What else? Is there anything else you guys want to look at? That's all I had for today. Today's going to be a short session. I'm still waiting. Nothing really has changed for me, okay? Day by day, people who change their stories just based on and reacting to the market, kind of like Jim Cramer. Jim Cramer, if you look at his show, every day he's got a new story on what's going on based on, and he basically all he's doing is reacting to the market, making up a story that fits the narrative, all right, and then going with it and going with it every live every day. Really, the story hasn't changed, okay? The story really hasn't changed, all right? We are in a liquidity tightening environment. All right, patience still pays. All right, my plans still haven't changed. I'm still short those 366 puts, and for assignment. I actually re-entered that put. Remember how we took profits on that 366 puts a few days ago? Well, yesterday the VIX almost touched 32, and when it did, I actually went short the 366 puts for November again, and they're in the profit right now. I sold it for I think 11.35 again, and now it's at about $10 each. So already I'm in a profit for those. So it pays to short the VIX. The VIX tends to revert back to the mean usually. Okay, usually it's just an equation that measures how expensive calls and puts are for the next 30 days. All right, near at the money. So that's why I short an at the money SPY put 30 days, around 30 to 45 days away, because essentially what you're doing is you're shorting the VIX. All right, I don't like those lines on the VIX. I like my VIX chart without lines. Okay, so I do have some lines. These are just common pivot points that I noticed since mid 2020. I mean mid 2010s. Okay, ever since they changed the equation, I think 2014, 2013, they changed the VIX equation, they updated it. And ever since then, I just noticed that sometimes the VIX changes directions at these levels. That's where I get my, around that 32 zone. It's actually around 31.5, but sometimes it overshoots, of course. And so that's why I use 32 as a place where I short the VIX generally, okay? And again, I'm ready to take assignment of the SPY shares. So even if it goes over and it keeps going up, so be it. I'll take SPY shares for my long-term holdings, all right? But shorting the VIX tends to be a good trade when it gets to 32. The odds get heavily stacked in your favor when you do that, okay? So we'll see what happens, all right? Anything else you guys want to look at? Going once, going twice. All right, well then, sold. All right, so that wraps up our session of the Morning Market Memo. Again, links are in the description. Come join our Discord. It's our Discord invite link is down there. Be a part of our growing community. No sub fees, no paywalls. Of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, and comment. Show us some love. All right, guys. I'll see you guys for Market Memo again next week, Tuesday, Wednesday, Thursday, 9:30 a.m. Eastern Time at the New York Stock Exchange Open. I will try to post another video either tomorrow or over the weekend. I'll get those Theta Thunders done. I should have another episode of Theta Thunder coming out really soon, so look out for that. Trade safe, guys, and I'll talk to you guys really soon.